Numsa members in the engineering and steel sectors have downed their tools. They're demanding an increase of 8%. But employers say conditions do not allow for such a steep increase, and they're offering a 4% raise. But what is this going to mean for the sector? What is it going to mean for the economy, especially regarding the sectors these are involved in? Professor Bonke Dumisa joining us. Hello to you, Prof. Always good to speak to you. And just how damaging is this going to be? 300,000 potential workers downing their tools. We're going to feel this one, aren't we?
We are going to feel it, but let me start from the beginning, just a bit. I won't drag this. Section 23 of our Constitution guarantees the right to form trade unions and to strike, etc. But Section 36 of the Constitution limits those rights. So when the employers say they cannot afford to pay that 8% that Numsa is demanding, they have a right to say that, and Numsa has a right to say, can we go through your books to prove that? So I agree with the employers under these circumstances that it is not affordable to pay 8%. Yesterday I was listening to the Reserve Bank making their different announcements, and they're mentioning that the real highest levels of employee increases as it is now, pay increases, was 4.5. Most entities have been paying far less than that. So when Numsa demands percent, I do not know where they get that, and it's far higher than the inflation rate in South Africa.
So based on the numbers, Prof, sorry to come in there, based on those numbers then, there is wiggle room for an increase, but 8% in its current climate is just far too high. I understand the employers offering around about 4%. So you're saying there could be a compromise here, but it's going to come down to Numsa to come to the table?
Well, it's not necessarily like that, because the sectors where they may have offered up to 4.5% were sectors where those sectors are viable as it is now. And the sector where Numsa operates is not doing well at all. When you look at the GDP figures for the first quarter and the second quarter, show that the sectors where Numsa operates have not been doing well at all. So their affordability levels are even lower, and Numsa had to take that into consideration. But so what worries me more...
Continue.
I was saying what worries me more is specifically about Numsa is that we saw the very same thing in 2019, where there were parts of those who pushed SAA when it was really battling into a major strike. And look what happened. Let us hope this will not end in tears, just like what happened at SAA.
And this, I suppose, is exactly what I was about to ask you, Prof. There's a very thin line here between holding a hard line of negotiation and ultimately putting a sector, and by virtue of that, an industry at risk of having to let workers go. As a final question to you then, how do the employers, the unions and the employees try and find a balance here? Because I'll tell you why I'm asking the question. Numsa coming out and saying that at least 6% must be offered to reopen negotiations. They bring in targets of CPI +2, etc., but ultimately it's 6% to even reopen negotiations. Do you think we're heading for a cliff that we might not be able to avoid?
We are heading for a cliff that we cannot avoid, especially because Numsa is so hard-headed on this one, that it's either their way or the highway. Employers there in their sector cannot afford. In fact, many of the companies in that sector are struggling just to survive. Because you must remember, you pay increases from profits. They are not just your ordinary cost of doing business expenses. So I think the headline of Numsa is going. That's why I'm saying it may end in tears. I hope they change their minds.
Would you tell Numsa to go for the 4%? That's what's being offered. Would you tell them, if you were advising them, go for the 4%, it's the best you're going to get? Final question.
Yeah, I would tell them, take that 4% and run, because Look at what happened with the public servants. They were demanding higher things. Look at the 1.5% they ended up with.
Well, I appreciate your time. As always, speaking to us, always love your insight. Professor Bonke Dumisa, economist and analyst, joining us here on eNCA as we continue to cover this strike of Numsa and its affiliated unions. Some 300,000 workers, we're told, ultimately will down their tools in that particular sector.